What up, Hyperchange? Welcome to another episode. Today we're talking about NIO, the electric vehicle startup that some people are calling the Tesla of China. I was just in Shanghai visiting the company's showrooms, testing out the products, was super impressed with what the company's building and the vision for the electric future in China that they're working on. The stock was on a tear while we were actually in China, hitting all-time highs or around the IPO highs of about $10 per share. There was also a huge 60 minutes interview with the founder, William Li, about their vision and what they're doing in China. And then the stock crashed about a week or two ago on a huge earnings disappointment for their Q4 2018 earnings, back down to about $6 a share. So this is where we are today. So for this episode, I wanted to go through all of the financials for Q4 2018. I listened to the conference call. We'll go through notes there, and I'll give my full thoughts with sort of an overview and update on the company. So the deliveries were already public for Q4 before the earnings were released. They released these right after the quarter ends, pretty much. So NIO for Q4 delivered about 8,000 vehicles, all of the ES8. It's 7-seater luxury sort of SUV Model X competitor. That's the only car they're selling for now. Deliveries more than doubled from Q3 2018. So this was all good stuff. And if we actually break it down to a monthly level, you can see that December was by far a record month for the company, 3,300 sales. November was also strong, so just really strong sequential growth. Then, why was the market disappointed? What happened? These are the numbers for January and February. This was the crux of the quarter, why everyone was so bummed and the stock tanked, because I thought NIO was just going to keep going, up and to the right. It was just going to keep growing and scaling rapidly going forward. But according to a number of different factors, they have huge decrease in deliveries for January, February. And NIO has put out guidance for the full Q1 2019 quarter at the midpoint of deliveries of 3,650 units, a decrease of almost 50% from what they did in Q4. So the reasons for this drop-off, there's a couple. I'll give you the one that I think is the most legitimate, and the first is I think there's a huge macroeconomic slowdown in China. Vehicle sales in China overall have been pretty weak. Additionally, we just saw Apple report numbers that were very weak, pretty much all because of weakness in China. So I think the sort of luxury, higher-end, middle-class consumer in China is going through a slowdown or sort of mini recession-like period, and that is hurting brands like NIO. So that's the first thing. The second thing is February was Chinese New Year. People take a week or two off, so there's little activity. It's like a huge holiday, so that can also decrease sales. Also, Q1, seasonally weak in the auto industry. So we have all these sort of non-NIO factors going on. And then on the flip side, I just think NIO sort of exhausted demand from these early buyers, and now they're sort of having, the rubber meets the road moment of seeing steady state demand, and the orders just don't seem to be coming in as fast as they wanted. But more on that later. Now let's get into the financials. So this is the numbers for Q4 that NIO reported, $500 million in revenue, but a loss of $501 million. So they lost more than they brought in. I thought the loss was going to improve, but it got bigger. They had $214 million in revenue in Q3, $409 million. So they more than doubled sales, but the losses grew. This is what we were looking at for the first 9 months of the year. Heading into the quarter, this is what I had been expecting for them to report for the full year. My estimates were actually pretty close. This is what they came in at, $720 million, slightly below my $743 million, and their loss of $1.4 billion, about $50 million bigger than I was expected. Tremendous revenue growth this year, but once again, those losses are just huge and growing. And where this really changed my estimates and trajectory and thinking of the company is for 2019. So I'd originally been expecting, $3 billion in revenue, a loss of about $1 billion, improving profitability, strong revenue growth as they delivered the ES6 and ramped deliveries of the ES8. After this quarter and reading the numbers and seeing how big of a loss they posted and their weak guidance for Q1, I had to take down my revenue estimate from $3 billion to $2 billion, and I've taken down my earnings estimate from negative $1 billion in operating loss to negative $2 billion in operating losses for the year. So, not the end of the world, but I just think NIO isn't scaling as profitably as I originally thought. This is the most important number to watch for NIO and pretty much any electric vehicle manufacturer. That is the GAAP gross margin. Are they scaling these vehicle unit economics profitably? And that's something that Tesla post gross margin in the 20% range, which is super, super impressive. And that's why the company is so profitable, because their gross margins are so attractive. So for NIO, they're a startup, they're young, they have made huge sequential improvements, but gross margins for Q4, I thought it was a good sign they were positive at 0.4%, but still 0.4% is a long ways away from the 20 or 30% they need to hit to be profitable as a whole company. And frankly, because their delivery guidance is so weak and their economies of scale are not going to be in play in Q1, I'm actually assuming like a negative 5% gross margin in Q1 back in the red. So this is something they're going to need to work on. This is like the most important metric I'm tracking for NIO, about the long-term health of the company is, can they build their cars at a profit? What sort of scale did they need to hit to be profitable? And right now it looks like we're nowhere close. And if we go back to this quarterly number, you can see that what I'm estimating, it's about the midpoint of NIO's revenue guidance, about 210 million in revenue. I'm still projecting loss about 500 million. So that is what it is. We'll see what happens going forward. Anyway, now moving to the conference call, we got a ton of juicy details on the business. Recommend, listening to that yourself. I'll put a link to the conference call and the earnings press release here in the description. Anyway, one of the first things they talk about is the ES6. This is NIO's second production car, which is coming out in Q2 2019. They recently unveiled it. It's a 5-seater SUV. Sort of, if the Model X is what NIO's ES8 is, the Model Y would be what NIO ES6 is, like a smaller, more compact sort of CUV type car. It's going to start at 358,000 RMB. It's going to have about a 510 kilometer rated range. And as of the end of February, they had 7,300 pre-orders for the ES6. People who would put down about $1,000 USD refundable deposit, just like Tesla's business model. And, I think that's pretty good. And they're expecting the order backlog to continue to increase before they start deliveries as they put it in more showrooms, which is going to start happening in May. We were in the NIO showroom in Shanghai. They had the ES6, which looked really cool. I think NIO's cars look much better in person than online personally. But that's just my opinion. But the ES6, we couldn't go into it, but I think they're going to change that. They're going to let people go in and play around with the car as they make it available. That'll increase pre-orders, and still on track for a June 2019 delivery. I mean, this is pretty crazy to me. The fact that NIO is going from, just already having 0 cars on the road in Q1 2018 to delivering the ES8, more than 10,000 units, already launching the ES6, scaling production of that just 6 months or a year later. The pace of innovation here of NIO is really impressive, and I think that's going to continue. In terms of the ES8, they've already delivered over 14,000 of those cars to customers in 270 cities across China. They're collecting feedback on all of these vehicles. They've actually, on the call, which I give them a ton of props for, is they acknowledge that the range of the ES8, there have been some customer complaints. A lot of you hyperchangers and NIO customers and people who talk to NIO customers mentioned that the biggest weak point is that the range isn't really as good as advertised. It's not as good of a long-range EV as they sort of tout it, but it seems like they're addressing that. They said they're expanding their charging infrastructure on the G2, G4, G15 expressways, so you can go between Beijing, Shanghai, and Shenzhen very easily with high-speed charging. So I love to see their focus on building charging infrastructure for customers and thinking about not just the vehicles. Like, this gives me confidence that NIO's really in it for the long term, to see them invest in these sort of ecosystem things. On that note, they did announce that they had about 100 service centers open by year end, which was really impressive. 66 cities, although they note that most of these are authorized service centers, so they're probably not run or set up by NIO. They're just authorized car dealers. But still, I think that's very encouraging to see progress in that regard. And they even stress how their focus is to really improve the customer experience and the service experience. And that's like one of the main management focuses, which I think is really encouraging and something that Tesla does need to work on. Then they mentioned the NIO App, which is something I've been personally very fascinated by. They've had hundreds of thousands of users on their app, despite only delivering 10,000 cars. The NIO App is sort of this hub for like the lifestyle brand that NIO's trying to build. You can buy NIO's products, you can, earn points for charging, you can track your profile, you can chat with friends. And so the new app data is they had about 800,000 users is what they claim in Q4, up from, if I recall correctly, 600,000 in Q3. I think that's like monthly active users. And then they mentioned that in Q4, they had peak daily active users of 190,000 people a day, which is about the peak daily active usage that they had in Q3. So daily active usage staying flat about 190,000, but MAUs going from 600 to 800,000 in the quarters. But, remember, they still only have 14,000 cars on the road. So having over 100,000 DAUs on their app, I think is still very, very impressive. Then the next thing, probably the biggest news besides the financials deliveries, was the Shanghai Factory news. So right now, NIO does most of its manufacturing partnered with a company called JAC, which is a state-owned manufacturing enterprise by the Chinese government. They outsource production to them and sort of work with them to build out these lines. That had been the near-term plan. Beyond that, NIO wanted to establish a fully wholly owned, vertically integrated factory in Shanghai, much like Tesla. But now, according to this conference call, they basically scrapped the plans for that lease. I think part of that is because the demand for their vehicles wasn't as much as expected, so that it made less sense to vertically integrate if they weren't going to sell hundreds and hundreds of thousands of cars right away. And there's interesting tidbits on the call about how it's also a strategic shift that they seem like they want to continue to outsource for a while. They even mentioned potentially getting other people to outsource from besides JAC. They could put out bids to see who could produce their cars the best for the cheapest, and they kind of want to leverage that. So NIO doubling down on sort of an Apple-esque strategy. Apple outsources to Foxconn for the actual production. NIO outsources to JAC versus Tesla, who builds their own factory and vertically integrates. So that's an interesting tidbit. On that note, they did say that the JAC factory has the capability to pump out 100,000 vehicles per year. They also want to build a new production line there for their third vehicle, which could augment capacity to 150,000 vehicles a year from this one site. And so that'll keep them going for the next 2 to 3 years. And that's sort of the only plan they're giving for now. Also during the Q&A, they mentioned the subsidy situation where EV subsidies are decreasing rapidly in 2019. So that's sort of been a headwind on sales as well. That could be contributing to weak Q1 numbers, but they do sort of, William Li, the CEO, still says that the Chinese government is very focused on pushing electric vehicles adoption in that space. And that's something I believe 100% after going there, seeing the green license plate. They're still gonna, push forward and incentivize people to buy EVs, but it sounds like those incentives are decreasing. That could be a slight headwind for the space. So that sort of sums up the quarter for NIO. Very disappointing Q1 numbers and probably Q2 numbers. But the last tidbit on the call that they mentioned was their guidance for deliveries of about 40 to 45,000 cars of 2019 is still intact. They only delivered about 12,000 cars in 2018. So this is almost a quadruple increase in deliveries, mostly on the back of the ES6, their cheaper price, more affordable model, I'm guessing, which will significantly expand the addressable market. So, NIO on track to deliver 45,000 cars this year, about a tenth of what Tesla's on track to deliver. So still nowhere near the size of Tesla, but gaining ground quickly. Here at $6 a share, NIO's trading about $7-8 billion market cap in USD. If they do about 2 billion sales this year, that's, less than a 4 times price sales ratio for a company that's growing way over 100% potentially. I don't own NIO stock, but I'm still very, very excited about the potential for this story. The Chinese EV market is huge, the biggest in the world, growing rapidly. I think there's a huge opportunity for NIO to become a huge business just in China alone, and let alone expand across the world. What I've seen early from their products is they're very promising. They sort of have a first mover advantage of Chinese luxury domestic EV brand, which I think they're running with. But this is sort of an interesting note in general on EVs and startups like this is I've sort of realized this phenomenon that happens that I'm calling the EV honeymoon phase. It's really easy to raise a ton of money, unveil a concept car, say it has all these amazing specs, generate a huge hype in the media and the press, and get, all this buzz. But then that's sort of the honeymoon period. That's when everyone loves you, everyone's hyping up your startup, but then actually building that, all you've really done is build a vaporware car with an unlimited budget. Not that impressive when you think about it. Now where the rubber meets the road is building these cars, doing so at a positive gross margin, profitably building these cars at scale, and having consumers be happy with the cars you built at a profit. That is really hard. That, to me, watching NIO struggle in that regard gives me a tremendous faith and sort of justifies how impressive the feat that Tesla has accomplished is, which is, they have hundreds of thousands of cars on the road. They're profitable as of the last few quarters. They've gone through all of these growing pains, which we're now watching NIO just start to go through. And it makes you appreciate how far Tesla's come and how solid footing and legitimate of a company it is relative to these other startups. And so I think that's the biggest takeaway from NIO's earnings is once the EV honeymoon phase is over, rubber meets the road. This is a tricky business. It's capital intensive. It's not easy to make at a profit. It's not easy to keep customers happy. When I think of startups like Byton, who we just put out a video about, who want to start delivering cars and ramping up, they're the perfect example of this company in the honeymoon phase, raised a ton of money, got a ton of hype, but can they deliver the cars? Can they make them work at that price point? Who knows? We will see. But anyway, I'm going to be following NIO super closely on the channel. One of the most exciting companies in the EV space. Think they still have a ton of potential despite this setback. I don't own any stock. Don't really plan on buying it for now. I'm still sort of in my do deep research, analyze the company, understand how this is all going to unfold phase. But would love to know what you think in the comments below. Are you a NIO holder? What do you think of the quarter? What do you think of the company? Also wanted to give a huge shout out to all of our Patreon supporters, producers, funding the channel, making it possible to go to Shanghai, to visit these companies, to make this content. Really appreciate that. Anyway, I'll see you guys next time. Peace.